Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, February 25th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you'll see here is that price continues to push higher, something we mentioned last week, that despite every pullback of one day or even sometimes 2 days, this market continues to hunt higher, and it appeared like it was headed to 2800 to 2820. It got to 2798, pulled back, and is now pushing beyond that 2800 level and into our target zone. It is firmly at 2805 right now. Again, this is what we mentioned. This was a pretty solid and strong rejection, V-bottom rejection, and all we needed to see was if price could hold a pullback to 2440, 2450, and if so, it could get us back to 2600 to 2620. At that point, we could see a rejection, or if price was able to re-establish acceptance back up to above 2600, which it did, then we would likely come to 2800 to 2820. So that's been the blueprint and playbook that we've used throughout the beginning of the year so far, and we have now reached the upper edge of the range. However, we could continue to see a push higher until we see rejection, some sort of significant rejection, maybe a blow off top, maybe a significant rejection tail. Until then, this market continues to push higher. It would be pretty significant, though, if price were able to push above 2830, 2835. That would be pretty significant, as it would be the highest prices that we had seen in a while since the breakdown day back in October. So the sell-off began back at about 28.90. Perhaps this market needs to reclaim 28.90 to come back and come full circle. So again, coming into some spots here where we could find resistance, but at the moment this market remains resilient and quite bullish and headed higher. Alright, taking a look here at the NQ. You'll see here again very similar price action. The difference with the NQ right now is this could be the beginning of what could be a rather bullish session, or bullish 2 to 5 days. You notice here very narrow range. 1, 2, 3, 4, 5, 6, 7 day range is super narrow, and we're now breaking through the top of that range at the moment. Staying above 7100 suggests much more strength ahead, and again, the 7200 level is the top end of the range we gave as resistance and the next target. Once we got back above 65, 66, the idea was that we would likely come back to 71 to 7200. If we were to get back towards 72, 75 and beyond that zone, that might be pretty significant. So we have some overage on the upside here in terms of an upside cushion for a target. The market remains very bullish. Whenever we do find rejection, that could mark a high that could bring us back toward these recent lows. But until that happens, everything's still flowing higher still. So let's take a look here at crude oil. You'll notice in crude we have had quite a bit of selling pressure, and that only began here in pre-market trading at around 5:45, 6 a.m. Central. Price broke below 2-day lows. You'll notice the previous session here we had a push above highs and then a close lower. Right now price pushed into the midpoint, rejected, and is now breaking down below multiple day lows. You'll notice here that crude oil is now inside the PIMA trigger zone as well. And that is something that's very important here, because any pullback into that zone within a very bullish uptrend is usually an opportunity to buy for a continuation higher. So we have had quite a bit of strength on one big leg up. We've had a little bit of sideways with a rejection that led to a great 2-week rally. This pullback is coming back into the PIMA trigger zone, and we also have the 55 key level here as a retest zone that could offer another buying opportunity. So I would say that here over today or maybe the next day or two, we could see some sort of pullback that offers a buy the dip opportunity that could bring this thing back towards 60. Failure to hold above 55s would open up a return back as low as 51.20. Alright, let's take a look now at gold futures. You'll see here with gold, We've had quite a rejection here recently. Again, this is about as bullish a move and a trend as we've seen in all of the market. Very, very solid since August, rallying higher. One thing you've seen here recently is a rejection of the previous month's high here. A big push up through it, big push back down, and now prices are holding off that edge. We have an inside day developing, a double inside day really, that is all holding below that midpoint. I did mention before that given the uptrend, 1326 to 1330 would be a zone for bulls to defend for a continuation higher. But I also mentioned that after these recent rallies, we've seen a lot of bit of sideways. And so we've seen a big rally here recently. We've pulled back. We're already seeing a double inside day. Does this lead to more sideways action here, or do we get more action? Given the fact that bears are still holding below the downtrending day midpoint, that would suggest that we could see further weakness below. So any break here below these recent lows, 1322s, could open up a return to 1304. Again, any retest back toward 1300 still would be considered an opportunity to defend as well. So we'll keep an eye on gold and see how it continues to develop the rest of the session. All right, that is it for now. We'll see how it plays out the rest of the week. Good luck, trade well, and I'll see you in the trading room.